Welcome back. The markets continue to be in the red. The frontline index has slipped further now, down about 120 points as we speak. But let's bring in Anirudh Garg, who's partner and head of research from INVasset, joining us now to discuss market fundamentals and his top sectoral picks. Anirudh, to begin with, a big picture where you think we are in the market cycle. And I know while you're more skewed towards financials, metals, and so on, any view on the IT space? Today the markets are under pressure because of some of those names and what's happening globally with AI developments every day adding more pressure, despite some of the earnings improvement we've seen from some of the top names in IT here.
A very good morning to all of you. See, stock markets are very simple. They just, what I say, they discount future growth. The current earnings, maybe they've improved a few bips, it's all right. But what is the problem? What the stock market is punishing the Indian IT for is their biasness towards a comfortable business model that they were operating in. I've been an advocate of this for a very, very long period of time, and your television and your sister television for a very long period of time, that things are changing. It is very, very necessary for Indian IT to change. They are having huge pile of money lying with them, rather than investing in, the future, rather than investing in research, rather than investing in AI. They are busy buying out their stock. That is, I think, as bad as it can be. The worst financial management that we have seen with somebody. The main problem with Indian companies is lack of capital. And these companies with so much capital, so much reserves are, taking it so defensively. I think if it is a wake-up call for them now after the latest Palantir software that says that either you wake up, you invest, they have the capability. It is. I was reading an article the other day which said that this is a Bangalore guy, a Bangalore person who has been the chief technological officer for the software which Anthropic, which is leading the way for AI in the US, for the software that's punishing these companies. Somewhere Indian companies know that they have the talent. It is just the will at the top that has to improve. And if it does, things can go. You have to have, like when you have antibiotics, you need to take rest for some time. It's okay to have a few bad quarters, but the street requires their will to progress. That will is missing. Some companies are showing it, but overall from the Indian IT, will was missing. And I think now either this Kodak moment happens for them or they wake up. It's their call.
Well, for now, the Indian IT seems to be resting after taking those antibiotics. We'll have to see how the patient recovers. But Anirudh, financials, the space you're clearly focused on. Any thoughts on this new RBI circular that's sort of clamping down on mis-selling? I mean, you can't really club any insurance policy with a loan. You can't force customers, clickbait them into buying a credit card they didn't want, and so on and so forth. Especially for insurance players, you see some near-term sentimental or otherwise impact?
I think when we talk about lending and insurance, two very different businesses, but aligned in the same way. So when we talk about lending, my fundamentals for lending have been very simple and on-ground fundamental, and I have advocated this over the past, that we look for companies which have not built their books in the past few years. So if you can get few upcoming companies which were silent or were newer and did not build their books in the last few years, it is very, very clear that they will not have problems with their books. Vis-a-vis the people who have built their books over the last 10 years, something like the names of Bajaj Finance, HDFC Bank, Kotak Mahindra Bank, they were the champions of the last decade, and some now growth problems and book problems are both gonna be there, and that is what the street sees over time. Whereas if we talk about PSU banks, newer NBFCs, newer banks, they have not lent. PSU banks, how I see it, were actually shut off from 2010 to 2020. They were cleaning their books. And after the new laws that have come in, the insolvency and bankruptcy code, the new insolvency and bankruptcy code, and the capitalization happened, now all the sectors that they lend to are, in healthy shape. There is no problem. The Indian economy is all right. So we are very bullish on financials. When it comes to insurance, I've never been a fan of insurance. because of the Indian bent of mind. But I still feel that there is a long way to go because there is still very underpopulation of insurance in the Indian when it comes to the Indian context. And somewhere the new GST laws that have come up and stuff will also help the insurance companies going forward. But we do not hold any insurance companies in our portfolio right now.
All right, you don't hold any insurance companies in your portfolio right now. What about old economy? The street is liking, metals. The street is liking good old oil. The street is liking maybe some of these pharmaceutical manufacturers as well. What are your thoughts on them?
Yeah. So you've talked about three sectors. Firstly, when we talk about metals, the biggest holding that we have currently after financials is metals. So we believe that I think the inflation concerns which were there for the plaguing the plaguing the economies for the last couple of years are nowhere to be talked about. And this is a time when we have our rate cuts in place and everything. Now we believe that somewhere it is the time for metals and commodities to perform. And if we talk about metals, we see non-ferrous. We are more inclined towards non-ferrous rather than ferrous, though we have ferrous also in our portfolio, but the percentage is a little less. I believe for the next 1 year, metals should be all right. And we should see a good, I think a double-digit plus growth in the metal sectors, although not a recommendation to buy and sell. Then what was the second sector that you talked about? Sorry.
The second one I spoke about was some of these upstream oil companies and maybe the refiners as well, if you could speak about them. And the third one was pharmaceuticals.
Yeah. Okay. So I currently don't have any view on the oil sector because, in India, if you have to talk about the oil sector, it's only the government companies that are out there. So oil sector, we are not tracking much because of so much geopolitical uncertainty which is happening where, the US has surrounded Iran and you do not know about Donald Trump. Yeah, none of us knows what will happen. So I think it would more be a bet rather than proper investment. So we are not having the right fundamentals that we look for when we look at the oil marketing or the oil manufacturing, oil refineries. When it comes to pharmaceuticals, I am very, very bullish on the Indian CDMO and the CMO sector over a longer period of time. I believe leaders that are out there, because I've been mentioning it again and again, please go out and read the US Biosecure Act, a country naming companies of another country. A country, US has named Chinese companies by the name that this is what we get from them, this is the growth expected, and this is what we have to reduce. And so it is very, very clear which is the next best alternative. India is the global, giant for when we say for pharmaceutical production for the CDMO and CMO. I was just going through this article, wonderful article, where they found this US company has found a cure for HIV. Yeah, the biggest problem that is plaguing the world right now, and they are giving it for $28,000. And Dr. Reddy's has come out in collaboration with one of them, and they said that we'll be providing it in $70. This is the power of the Indian pharmaceutical sector and the CDMO and the CMO sector in India. So I believe I've been always bullish on the pharmaceutical sector, and now with US shifting its clearly shifting with the policy, I believe Indian CDMO and CMO sector should be very, very good, both domestic and export.
All right, Anirudh, pleasure hearing your views, and thanks very much for sharing them.